in a trillion-dollar world. If you look at what's happened over the last 25 years, the way wealth has grown substantially across balance sheets, it's insane. The kind of conversations that we're having today with people is not about that $100,000 anymore. It's not about that $1 million anymore. The question is, who are doing those trillion-dollar transactions? Governments are doing it. Corporations are doing it. We have companies today which are multi-trillion-dollar companies, right? So it's not a $1 trillion company. You've got two, three, $4 trillion companies that are bigger than an economy. And I want everyone to kind of get an idea of what's changing in the world. So if our corporation sizes are changing, our client sizes are changing, why is our strategy not changing? You see, our training sessions have not changed over the last 100 years. I'm a third generation financial advisor. My grandfather was a financial advisor. My dad's been a financial advisor for the last 50 years. I've been in financial advisory. This is my 25th year in the business. And there's one thing that I would love to share with every single one of you. If there's one change that you need to make, it's the conversations that you're having with your clients. We have gone away from the days of fact finding. Fact finding is a compliance requirement, it's not a sales requirement. When you sit down with a high net worth client today, they are extremely worried about what to share, what not to share. And when you sit down as an advisor, they always close up, or they will make you hear things that you want to hear, right? Let me tell you exactly what happened about a week ago. So a week ago, I was speaking at a very private group event, specifically for family offices across the Middle East and Southeast Asia. 12 families, very simple conversations, a Zoom call like this. And during that conversation, it was a conversation that we had to sign NDAs, so we were not even allowed to disclose who we are speaking to, etc., etc. We had signed all those. We had a lot of waivers to get into that meeting. 12 out of 12 family offices, and I'm not joking. I'm not saying 11 out of 12. 12 out of 12 family offices had zero life insurance. Let that sink in, guys. 12 out of 12 family offices, and these are in excess of $100 million plus, had zero. And I'm not talking about, oh, they had little life insurance. They had zero life insurance. And I asked them a simple question. How? I mean, aren't advisors approaching you? Aren't bankers approaching you? You are in that private banking, investment banking kind of space. How can nobody be talking to you about life insurance, right? And they said, Sanjay, we've never seen value in it. That was that aha moment for me. What's missing is the value in our conversations. So 12 out of 12 family offices had zero life insurance. Can you imagine the kind of conversation I had over the next 1 hour with them? So I was the insurance expert that they had called on because they said, you know what, we want to know about it, but we just don't trust anyone. In that 1 hour, post that, and this was just a week ago, I've done 27 cases from those 12 families. Each of those cases is probably going to qualify me for at least one, if not two, top the tables. Each of those cases. What changed? There was only one thing. The fact that is life insurance valuable? Now, we as all advisors can absolutely agree on one thing very strict, that we all believe that life insurance is valuable. But is that translating into our presentation? Is that translating into our conversations? Is that translating into our body language? Is that translating into the way we present ourselves? Or are we still doubting our product? Are we still doubting its benefits? Are we still doubting what we could achieve by putting the right life insurance structure in place? Now, I know some of you are focusing on comprehensive financial planning. There is no comprehensive financial plan without life insurance. If you're doing comprehensive estate planning, there is no estate planning without life insurance. It doesn't matter which type of planning you are focusing on, whether that's investments, whether that is financial planning, whether that's estate planning, whether that's risk management, whether it's asset management, whether it's family office management. It doesn't matter which one you choose. There is not a single strategy of proper planning that would not include life insurance. So when I sit down with a client, it comes down to how do I start my conversations? Because our biggest challenge is finding that opportunity to do a presentation, finding that opportunity to be able to say, you know what, now is my time to speak up. So, ladies and gentlemen, we are always looking for that opportunity to share what we are thinking. Every time we sit down with a client, whether that's face to face, whether that's a Zoom call, it doesn't matter. We're always looking for that opportunity to start our presentation. That opportunity starts with, how are you? Whenever someone asks you that question, how are you? That is your opportunity to start a presentation. Because when they're asking you, how are you? They expect you to give a very random answer. I'm fine, I'm good, I'm great. One of those answers. And the follow up from that is, how are you? So, if someone asks you, how are you? I'll say, hey, I'm great. By the way, how are you? You have just lost an opportunity to do a presentation. Why don't we change that answer a little bit? Why don't we start by saying, I'm so good. Last week, and once you start that, you're now moving into a presentation. It's your time. It's those 2 minutes, those 3 minutes that allow you to have the opportunity to have that presentation. When you're looking at any client meeting, what is that client trying to understand? Why do I want to spend time listening to you? Why do I want to spend time talking to you? So I'm going to give you a few guidelines that would help you in this business. One of them is understanding what the framework looks like. So every time we're talking about insurance, it's what we call a negative framework. No one is interested in listening to conversations that start with, what happens if you die? What happens if you fall sick? What happens if you turn old? Um, Guys, we're selling fear because that's what we were trained on. We were trained to ask these very, very powerful, yet questions that nobody likes to answer. Because when you look into someone's eyes and you say, what happens when you die? And you hold that pause, it's extremely powerful, but it builds up what we call a negative sentiment. And when you're sitting with very successful people, right, they don't like to associate themselves with people who are negative. Now, I would love to know everyone that's in this session. So if you can, please could you write down which country you're from? So it gives me an idea which country you're from, so I can give you some country specific examples. I'd love that. And I would also like to share one thing very important with you. I do work in about 100 countries, so I'm currently licensed and I do have clients in just over 100 countries, which makes me able to provide certain relevant advice in terms of whichever country you're probably from. So if you don't mind, in the chat, do please do put out in the Q&A or any of those, wherever you can. I'd love to know which country you're from. It'll allow me to give you a little bit more country-specific advice. The one thing that I did want to talk about, and going forward from there, was if our conversations are all based which are negative stuff. I mean, if you think about it, right, our products were built for negativity. When things go wrong, we are the backup plan. When things go when the breadwinner passes away, we take care of the family. When someone falls sick, we're there to take care of them. However, it's not something anyone likes to plan for. I mean, think about it. How many of you are spending time or would love to spend time planning your death? Um, I don't mind spending 3 weeks talking about my vacation this winter. So I'm planning my Christmas vacations, and I'll spend 3 weeks doing that. But how many of us are going to spend 3 weeks planning our death? I want you to think about this. No one's really interested. No one's interested in even talking about it. Forget planning for it. And there is no dinner table where death is a conversation that the family wants to discuss. So there is no dinner table, there's no lunch table, there's no breakfast table where you could sit down and have a discussion about death, illness, you becoming old and needing that support. Um, there is no dinner table such as that. There is no culture. So I meet a lot of people tell me, Sanjay, in our culture, we don't like to discuss about death. I've not seen a single culture in the world where death is openly discussed, where a wife tells her husband, darling, if you die, what should I do? Or a child tells their parents, mom, dad, if you die, what should I be doing? It's not conversation. So why should that be our conversation? Now let's think about this. Who is our real client? Is it the person that we are insuring or the person we are actually keeping as beneficiary? Whoever is the beneficiary is your true client. It is not the person you insure. Think about it. When you buy mortgage insurance, who are you actually protecting? Your family or the bank? You're actually protecting the bank. You're protecting yourself or the doctor. You're actually protecting the doctor. And why is that important to know? Because the person who gets paid is the one you're trying to protect. You see, insurance was built to protect whoever you love. If you love your family, we protect your family. If you love your business, we protect your business. If you love your home, we protect your home. If you love yourself, we protect you. Whoever you love is who we protect. That is the power of insurance. We protect whoever you love. We don't protect someone you don't love. And then the other problem is, how many of you have been using ChatGPT? So I heard David talking about ChatGPT and how Islamic insurance is something that's really growing globally. But the question is, how do you actually position it or find out you actually structure it? And how many insurance companies are there in terms of capacity? So one of the biggest challenges that we have is capacity. You know, I sit down with a lot of financial advisors, and the first question they ask the insurance company is, what's the minimum amount of insurance I can sell? And I'm like, why do you start with that question? Why don't you start with what's the maximum amount of life insurance you can buy? So I'm going to ask this question to all of you. What's the maximum amount of life insurance you can buy? Think about it. Think about it. Because one of the things is we all believe that we can buy as much insurance as we like. And and if there is one thing you get through, there is only so much life insurance you can buy. So I was sitting with this family, which is a multi-billion dollar family, and that's how my conversation started. I said, you know, I know you'd love to protect your entire estate and you'd love to protect all your beneficiaries and all of that. Unfortunately, the maximum amount of life insurance you can buy is probably about $300 million. So even if we travel all the way from Japan to the United States and we travel across the world, multiple insurance companies, multiple reinsurers, we pretty much go all over the world. We will probably be able to get $300 million of life insurance. So buy it. That's a maximum you can buy anyways. For your children, you can probably buy 25, 40, 50 million maybe if they're very young. Max it out. Why does an insurance company put a maximum on how much life insurance a person can buy? Ladies and gentlemen, let me ask you this question. Why does an insurance company put a limit on how much life insurance a person can buy? Why can't they buy $1 billion of life insurance? Why not? And it comes down to one very important word: capacity. You see, life insurance companies actually lose money whenever there's a major claim, but they really make money when people either cancel their contracts or they surrender or they modify it. And that's how they make their money. So I tell this to my clients: if you truly want to earn money from insurance, buy the maximum you can, because at no point will you ever pay more than you will claim. Think about it. Death is guaranteed. Then how come you're paying lesser than what you're going to get? For a very simple reason. Lisa said a very interesting thing. The insurance company will go broke. That's right, Lisa. So they put a limit on how much you can buy. Isn't that amazing? They actually put a limit on how much you can buy. If you were a supplier of steel, um, of wood, of any other product, you will find different ways to increase your capacity. But when you're in the life insurance business, you want to make sure that your capacity is constrained, because the more business you get, the more worried you are about solvency, about ability to pay claims, about being able to reinsure that risk, about being able to pass on that risk. And the day I understood that, I sit down with every single family office today and I give them only one valuable advice: buy the maximum and borrow from the banks. I'm going to say something that's extremely controversial, and I'm okay with that because it doesn't affect me. The word is bankrupt, not insurecorrupt. You see, banks go bankrupt. Insurance companies don't go insurecorrupt. The word is bankrupt. So I always tell my clients, if you want to keep your money safe, keep it with an insurer, because the probability of an insurer going bankrupt is extremely low. That's why the word is bankrupt and not insurecorrupt, right? So you keep all the money that you want to give your kids, keep that in an insurance company, and any money you want to spend, borrow it from the bank. Because if the bank goes bankrupt, hey, you probably don't even have to pay off your loan. So the word is bankrupt, not insurecorrupt. There's a reason for that. Insurance companies are not allowed to play with your money. They are very prudent, they are very careful, they've got extremely stringent policies on what they can and cannot do with that money. So any money you want to leave for your kids, leave it in an insurance company. Any money that you want to use in your lifetime, borrow from a bank. It's the perfect murder, because you cannot lose ever. Think about it. I have a lot of clients who tell me, oh, Sanjay, your rate of return is very low. How many of you have heard that objection that, oh my God, the rate of return in the insurance companies is extremely low? And I always tell this to my clients: you are absolutely correct. You see, insurance was not built to create wealth, it was to ensure you don't lose your wealth. If I could create wealth, then I wouldn't be teaching you how to do it, right? My job's not to make money for you. My job's to make sure you don't lose the money that you have, right? That's my job. Now, what you do is you put all your money in the insurance company, all right? And if you have an investment, you have a business opportunity, you have a strategy that can earn you more than the insurer is paying you, borrow from us. Borrow. By the way, another very important thing, and I'm going to say this out straight because we have a few years left before this law changes. Insurance is the last tax-free asset left in the world. Insurance is the last tax-free asset left in the world. It's only a matter of time before the government starts finding ways to tax the death benefits that come out of these life insurance policies. So right now they've already started looking at cash values, and they've started looking at where you invest and the product, blah, 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 blah. It's only a matter of time before death benefit starts to get taxed across the world. Some countries have already started it. If you're from Lebanon, you know this. You have a 10% death benefit tax. If you're from France, you probably have a 23% death benefit tax. If you have purchased a life insurance policy from outside of Japan, you would probably have death benefit tax to be paid in Japan. So you have all countries which are already starting to look at different ways to tax the death benefit. And I'm telling this to every single client of mine today.